With us, it takes just about 20 minutes and you can change your plan anytime without extra charges. We use the same towers as the big guys, so you'll get the same fast nationwide coverage without the big wireless bill.
Our plans start at just $20 a month, and for a limited time, switch and get your second month free. Call 1-888-FREEDOM, visit consumercellular.com or a store near you and get your second month free today. Plans include $5 credit for auto pay and e-billing. See site for additional details.
I was out working, a car out of the blue crossed the center line and crunched me. There was nothing I could do. Everybody thinks that they can do their own attorney, but you can't. There's too many legal hoops. There's too many options.
Insurance companies love taking advantage of people who try to handle their cases alone. Seriously injured? Call Konowski-Bresney. We get your worth.
I'm very happy with the result. I don't think any other attorney could have done a better job.
Call Konowski-Bresney at 888, the letter U, count and the number 2, or see me on the web at bresneylaw.com.
You're tuned in to Money Matters Boston, 1120 AM WBNW. This is WBNW, 1120 AM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston, the Money Matters Radio Network.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Mark Vonner is the CEO of Veterans Development Corporation. His dedication to serving our veterans has made an incredible impact on his family and employees. And he is so proud to be the presenting sponsor of the DAV 5K Boston.
This is Brittany Vonner. I'm a registered nurse who is now working as an assistant project manager at Veterans Development Corporation. Working with my father, Mark, has been an incredibly rewarding experience. Our company is dedicated to serving VA hospitals and veteran communities. We don't just build facilities, we build environments that support healing, resilience, and family. We are so proud to see our work directly impact the lives of veterans and the professionals who care for them. This rich history is why we care so much about supporting great organizations such as the Disabled American Veterans Department of Massachusetts and the work they do to care for our veterans.
Join Veterans Development Corporation in thanking our great American heroes. Please visit dav5k.boston to show your support today.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about estate tax reduction and asset protection strategies that can help reduce or eliminate your estate taxes. Todd, there have been major changes with the Massachusetts exemption amounts. What is the new exemption for the state? Does that mean that a married couple living in Massachusetts with $4 million in assets could eliminate their estate taxes?
So yes, there has been some changes. Now we're almost a full year in, of course, heading into a second year into the change. The change is now $2 million. It used to be $1 million for estate tax exemption. Now it's up to $2 million. And yes, if you are married, but you actually do trust planning, you can shelter $4 million. But folks, that doesn't mean that's all you do. For folks with $3 million that want to eliminate taxes, we can do that, but we can also think about protecting assets from the cost of long-term care. It allows us to do both a little easier now with a higher estate tax exemption. So think about ways in which you can use the irrevocable trust to not only shelter and be able to reduce your estate tax by sheltering up to $2 million on the death of each spouse, but also starting that important 5-year waiting period running to protect those assets from the cost of long-term care.
The law firm of Cushing & Dolan have been helping families like yours for more than 40 years. Request your copy of Todd's brand new guide. It's called Balancing Asset Protection and Avoiding Estate Taxes. You can call 866-848-5699. That's 866-848-5699, or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you, and I hope you all had a great Thanksgiving. Hope you have worked through all that turkey. Not worked off all the turkey, but worked through it, because generally you get to the Monday after Thanksgiving, and hey, even if you had, a nice juicy bird on the table on Thursday, it's usually pretty dried out and not very good today. So hope you made the best of last week, and we're happy to be back in the driver's seat on December 1st, ready to power through the last month of 2025.
I'm not ready.
What are you not ready for, Michael?
I mean, you always suspect that maybe ate too much Thanksgiving, but, putting on my pants today compared to Tuesday of last week.
They look tight.
The same pants. And they do not fit the same.
They don't look like the same pants.
No, they do not. They do not fit
they
the
look
same.
different.
And, it was a gluttonous, really 4 days. Gluttonous 4 days for me, personally.
I'll say this. So, I love, if you actually know how to cook a turkey,
sure,
it's fantastic. Okay? Most of our problems with turkey come from Americans' desire to just, hey, get that thing as overcooked as possible because we're so nervous about foodborne illnesses that really just aren't present in large quantities or even small quantities in the United States anymore. So if you just don't overcook your bird, you're generally going to be in a good spot.
That said, there is nothing more embarrassing than poisoning 20 people.
I can think of a few things more embarrassing.
Not many.
There's a few.
Yeah.
But in any case, we digress. December. So what do we have this month? Whole bunch of weirdness, largely related to data coming out from the government shutdown on delayed fashion. So this Friday, we're going to be getting the PCE price index for September.
Wow, that's late.
Who cares? Shouldn't even be on the list anymore. It is not influencing anything right now. This is also, by the way, why.
How bad would it need to be to influence anything at all? It would need to be a percentage point higher.
Yeah,
than where estimates come in.
If core PCE came in at 6% for the month, it would influence my decision somewhat.
Yeah.
This is also why, you remember the conversation this summer about hey, these revisions are so big, why don't they just wait and release the data later?
It's useless.
It's because it's not useful to anyone if you're releasing the data 3 months after it comes out. The revisions, again, there's a reason why no one pays attention to the revisions is because it's not relevant to what's coming next. And so I think ultimately you need timely data. And the fact that we're getting the September PCE on December 5th is kind of evidence of, hey, you can't just wait for the data to be perfect. Publish it and then revise if needed. That's how it should be. Other than that, we got some ISM data coming out today and Wednesday. ISM manufacturing came out at 10 a.m. this morning, reading of 48.2 compared to expectations of 48.6 to 48.8. I have not had a chance to go through the whole thing yet, but new orders declined and employment declined from the prior reading. So those generally are pretty big components. And ISM saying, yeah, not great for the month of November. The counter to this, the ISM manufacturing report has been essentially useless over the last 5 years, so I'm not sure that you should care too much about it today.
Yeah, it hasn't indicated what it used to.
No, it just has not been useful. Then, later in the month, next Tuesday, we're going to be getting the JOLTS report, the job openings report, about a week delayed from when it would otherwise be. But, hey, nice that we're going to get it at least, and then we should be, kind of back to a regular cadence on that report. We then have a Fed meeting next Wednesday, which is going to be happening without a few key pieces of data. The first is non-farm payrolls. The jobs report is coming out the following Tuesday, December 16th, because it takes a while to spool that back up. Also, the producer price index for November comes out on the 11th of December, the day after the Fed meeting.
Good.
And so there's been some chatter, hey, should the Fed just push their meeting back a week? Which, quite honestly, I don't know why they don't. It's not like there is some kind of requirement that the Fed meeting has to be held at a certain time and certain date. They choose a regular cadence because of how it works. But
it does seem rather useless to hold this meeting.
What's the point of this?
You're going to spend all of the time
answering questions about, well, if the data next week shows this, what will you do?
Yeah.
Instead of
delay.
They really should just delay. And I'll go even further on this just because, I don't know, I think that this would be, they won't do this just because it would be too juicy, I think, if they wanted to go this route. But if you really wanted to get, kind of all the data that you wanted in order to make your decision, retail sales for November comes out on December 17th, and CPI comes out on the 18th.
So Christmas Day Fed meeting?
What about a Christmas Eve Fed meeting, Michael? Wednesday, December 24th, because they always do Wednesdays.
Yeah.
Hey, 2 p.m.
Does Jay still sport a purple tie for that?
What are you giving us in our stockings, Jay, on Christmas Eve?
Yeah. Yeah, well, not going to happen. So let's think about, they're probably not going to delay it at all. It seems very unlikely.
It's going to be next Wednesday.
On the Fed has even mentioned delaying it, so I don't think it's going to happen. Jay's speaking tonight at 8 p.m., so you can tune in and maybe he'll talk about it then, but probably not. So how does the Fed approach this rate cutting decision or this rate decision given the complete and utter absence of official data on the economy?
Generally, the best predictor of where the economy is going to be tomorrow is where it was yesterday.
Sure.
Because the trend tends to be maintained. Given the fact that we have a labor market that has been weakening at a pretty consistent rate,
except for September, where job creation bounced back to be about 4 to 5x.
Even there, if you look at it on a 3-month moving average, you generally have this has been something that's been declining for 3 years now on a pretty consistent basis. And so, given that, if the Fed was nervous about downside risks to employment in September and October, they should be cutting in December.
Mm-hmm.
I've also said I don't think it matters whether or not they cut in December. What's going to matter is, hey, do they end up cutting probably another 1 to 1.5%? Because the first 1.5% of rate cuts hasn't done anything to help housing, which is the sector of the economy that typically benefits the most from rate cuts.
We usually talk about the Fed in terms of this one ubiquitous body. It's not. It's several 11 voting members? How many voting members? 12?
12.
12 voting members. the agreement on cutting rates was not unanimous. And in fact, the idea that
we had bidirectional dissents.
Yeah, I mean, that I guess would be my point is, if the Fed believed that the economy was weakening at the last meeting, well, not all of them did. And in fact, you had some dissents. And so I think it's very likely that the Fed continues to cut rates at this next meeting. But as many of them have been saying out loud over the course of the last several weeks, it is not baked in as a, absolute that the Fed is going to cut rates. I think it's likely what happens. I tend to agree that it's the right thing to do, but I expect there to be more dissents.
Let me throw another wrinkle into this, which is even if the Fed does continue cutting beyond December, it might not matter for what matters to the economy. And by that I mean housing doesn't move based on where the Fed funds rate is. It moves based on where longer-term rates are. 10-year Treasury, 30-year Treasury, things along those lines. 10-year Treasury this morning is up 6.2 basis points, courtesy of Japan. Why Japan? Because earlier this morning, the Japanese central bank signaled that they may end up raising rates at their upcoming December meeting, which in turn has thrown Japanese government bonds into the next phase of their sell-off that's been ongoing for the last 18 to 24 months now. And so you've got Japanese bond yields blowing out topside, which are taking global bond yields with them because everything kind of moves in lockstep. So the 10-year Treasury is up 6.2 basis points today. Fed didn't do anything. And quite honestly, if the Japanese central bank decides they need to move in this fashion, which they may because, hey, surprise, inflation's kind of picking up in Japan and continuing to be a problem there, this could be a problem for the rest of the world from a borrowing perspective, and the Fed could just be pushing on a string here where they say, yeah, let's keep taking rates down, and the long end doesn't move as a result of it.
When was the first? It was September was the first rate cut of this year. I don't know the exact date, but according to Mortgage News Daily, on September 5th, the average 30-year fixed-rate mortgage was 6.29, and today it is
6.22.
So you've had 50 basis points of rate cuts and no move in mortgage rates.
No. And so this is where the Fed could find themselves in a bit of a pickle here where they could say, yeah, we want to cut rates. Of course we do. And the market says, that's great. It ain't influencing the long end of the curve.
Yeah.
Let's take a quick break. When we return, we're going to talk about whether Santa Claus is coming to the end-of-year rally. And then we're going to be talking about what we're seeing for early Black Friday and Cyber Monday sales numbers. Were you out and spending money? We'll let you know after this.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network. When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederiksted comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Mark Vonner is the CEO of Veterans Development Corporation. Mark faithfully served his country from 1981 to 1984, and we're thrilled to have him as a partner and presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family that includes his father Victor and brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and it's one of the main reasons he chooses to give back to this special community. Mark is honored to continue the legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the Disabled American Veterans Department of Massachusetts. You can join Mark and help our great American heroes today by making a donation to support the DAV Department of Massachusetts. Please visit dav5k.boston. That's dav5k.boston.
The Armstrong Advisory Group understands retirement planning, and when it comes to married couples, it can be about more than money. Hi, this is Mike Armstrong, and our new guide called Retirement Planning for Spouses tackles many issues that couples face as they're preparing for later life. This guide keeps things simple, focusing on important matters such as making sure both partners understand where their money's coming from in retirement, being aware of scams, how to stay organized if one spouse outlives the other, and ways to handle gifts, donations, or legacy goals as a team. It's a straightforward look at the steps every couple can take to feel confident about retirement. Call the Armstrong Advisory Group right now at 800-393-4001 to get your free copy of Retirement Planning for Spouses. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is powered by Circle K Convenience Stores. Circle K is now the official convenience store of the DAV Department of Massachusetts. On behalf of Circle K, thank you, veterans, for all you've done.
Piece here in Yahoo Finance. It's titled, quote, "I don't know if we'll get that Santa rally. Why Wall Street says December may break from its usual strength." So basically, they're saying, hey, like stocks could go up, but they could go down.
Their main argument seems to be that, like, well, September wasn't bad, and it usually is, so maybe December Santa Claus rally is going to be bad instead of good.
And then November was choppy, and, you know, October had one bad day in it, so you never know what you're going to get because the market's like a box of chocolates.
So let's describe what the Santa Claus rally is, because it does not just mean that all of December is wonderful. The Santa Claus rally itself is actually the last 5 trading days of the year, plus the first 2 of January. So that's like the actual, if you're looking for what people look at as the statistical significance of the Santa Claus rally,
yes,
it is not anytime soon.
No, it's actually Santa Claus coming to town.
It also is not hugely, I mean, it's not a hugely significant portion amount. Like the average over, I think, the last 50 years is somewhere in the 1.4%.
It's like 1.5%, and it happens on average like 75 to 80% of the time. So it's, you know, again, it's not
statistically significant.
Yeah, it happens, and there are reasons why it happens. By the way, like
right.
if you just like look at it,
do they have to do with Santa Claus?
kind of, if you think that Bill Ackman is Santa Claus.
Sure.
So, look, here's why the Santa Claus rally typically happens. Number one, it is a low-volume time of year, basically the last trading week of any year, and then the first couple of the next year. Basically, every fund is trying just to finish up its calendar year, and the incentives are for them to chase performance, and if performance has been good, that means that you typically see that performance chase happen. So, like, there's really clear, just mechanical reasons in markets, why it would occur. The other stuff that you see around the same time, hey, stocks that have typically lost heading into the last week of the year tend to lose the last week of the year because people harvest those losses, and then you tend to see a little bit of short-term outperformance the first couple trading days of next year as new investors, that selling evaporates, and there's a dearth of sellers, and, I hate the phrase more buyers than sellers, but it's kind of what you have on, the next days. Hey, there are more buyers who are willing to push prices up as opposed to sellers who want to evacuate positions, and so you tend to see that. So I think overall, look, I don't know what this piece is supposed to tell us because, A, the Santa Claus rally is not something that happens for another 3.5 weeks. B, it's pretty much someone saying, well, it might not happen this year, which, okay, like, why is that news? It doesn't happen every year anyways. And while not quite as annoying as the pieces last year that were like, hey, the first 3 days of 2024 were bad, does that mean stocks are going to go down this year? It's not at that level, but it's kind of just, okay, what do I do with this because it's kind of useless.
We can agree there, Chuck. Yeah. But at least understand what the Santa Claus rally is. It does not have anything to do with December 1st. I know that all of you are spotting your elves for the first time of the year today, but that is not what contributes to the stock market rally. Elves on shelves is what I'm referring to here.
Next up, other things that annoy me. We're not doing Festivus today, right?
Nope.
No.
Go for
I
it.
should get that in the calendar, though. So I'll
get
do that.
it queued up. I've been building my list.
Yeah.
Checking it twice.
Later this month.
Thank you. Piece from the New York Times. Shoppers drawn by steep discounts power through Black Friday. So I've read a bunch of pieces on Black Friday shopping trends. The good news is basically all of them are like, yeah, Black Friday was better than expected. The bad news is that none of them show the same data. I've seen some saying, hey, Black Friday sales were up 4%, some saying they were up 9%, some saying they were up 3%, some saying they were up 6%. Like, I've seen everything, and so I don't know what to do with this other than to say, basically everything continues to point towards, despite concerns about the labor market and whether it's strong enough to support consumer spending at these levels, consumer spending still continues at these levels.
Which is also very funny because last week all the coverage was about how when Deloitte went and polled consumers, they all said that they were going to budget this year and spend less than they did last year, and we all called baloney on that one because we never do that outside of recession. I think... So let's start with the Adobe data because that's the one that's most quoted out there that I've seen, and that's the one that I think even the president put out there on social media where there was a 9.1% increase year over year. They are measuring online sales data estimates for Black Friday. So again, that's not what Black Friday is. It's traditionally going into stores, but nonetheless.
Right, I thought you had to wait to shop online until Cyber Monday.
Yeah.
I thought it wasn't allowed on Friday.
Incorrect. But taking a look at this data, I tried to then compare it to overall holiday shopping data, which I pulled from Visa, and the correlation isn't that significant. Like, when it comes to overall holiday shopping season, the last several years has increased by like 4 to 5%, and that's been the norm outside of the pandemic when it surged massively. But for instance, in 2022, Adobe estimated that Black Friday sales were only up 2.2% compared to 2021. And yet holiday shopping data came in, holiday shopping overall 5.8% increase. Likewise, the Adobe reported in 2021 that it actually shrank, and yet 2021 holiday shopping season up nearly 12% according to Visa. So I don't know that this tells us anything.
I maintain that we are in the same place that we were 3 months ago, 6 months ago, 9 months ago, which is consumer spending is continuing to move up at about a 4 to 6% clip year over year. 3% of that is inflation, which means there's like 1 to 3% real spending growth. It's probably being driven more by the high-end consumer. And until proven otherwise, that trend is going to continue.
By the way, Visa is forecasting that overall holiday sales will go up 4.6% this year. That compares to 4.8% last year. So it seems to line up precisely with what you're talking about there.
So I think when we look at holiday shopping trends, the message that I'll get out there is they're good. There are no real signs of weakness, and that's a good thing. Quick break here. Wall Street Watch is next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Nobody wants to think about estate taxes or nursing home costs. But if you want to protect your money, your home, and everything you've built, you've got to get ahead of it. That's where Cushing & Dolan come in. They're experts in estate planning and elder law, and they've just released a brand new free guide called Balancing Asset Protection and Avoiding Estate Taxes. This guide lays out practical ways to keep your assets safe, and yes, even reduce or completely eliminate your estate taxes. If you already have a plan but aren't sure what your risk looks like, or you've been meaning to start one, this guide gives you exactly what you need to take control. So don't wait. Call Cushing & Dolan today at 866-848-5699 and get your free copy of their new guide called Balancing Asset Protection and Avoiding Estate Taxes. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We have a new guide available this month titled Retirement Planning for Spouses. Mike, one of the challenges that spouses face is figuring out how to draw income in retirement and the way to optimize that income, given potentially multiple Social Security payments, portfolios, pensions. Where's a good place to start?
Yeah, of course, with a married couple, you have increased optionality about where your income comes from, which of course means increased complexity and all sorts of different decisions to be made. But yeah, first of all, you've got your Social Security. Depending on the work history of the couple, right, you might be talking about taking your own benefit. You could be taking benefits based on the working income of your spouse. There's no choice to be made there, but there is a choice to be made in terms of timing. When do we start those benefits? What's the age difference between the two of us? If there's a pension involved, what sort of survivorship benefit do we take? Do we consider life insurance as an alternative to that survivor benefit? And then, of course, your portfolio between Roth, traditional, and taxable brokerage accounts. There's a lot of decisions to be made on that side as well. So it's a lot of decision making to be made, and that's where having a good, firm plan about which income starts at what point based on our own life expectancies and taxes is really important.
Folks, the guide is titled Retirement Planning for Spouses, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by visiting ArmstrongAdvisory.com. That phone number again is 800-393-4001, or request it at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, traders are returning from the Thanksgiving holiday and turning the calendar to the final month of 2025, where markets are currently seeing a modest sell-off. Right now, the Dow is down by 0.7% or 334 points. S&P 500 down 0.2% or 43 points. NASDAQ down by 0.75% or 178 points lower. Russell 2000 is down over 0.8%. 10-year Treasury yield rising 6 basis points this morning at 4.083%, and crude oil up about 1.5% higher, trading at $59.38 a barrel. Some NVIDIA-related news to begin with, where NVIDIA invested $2 billion in Synopsys common stock as part of a broad strategic partnership. Shares in the provider of software for chip designers are jumping nearly 4% higher, while NVIDIA stock is rising about 1%. Meanwhile, several crypto-based stocks, including Coinbase, seeing losses after Bitcoin tumbled further to $85,000. Coinbase shares are down by over 5%. Elsewhere, Eli Lilly announced it is lowering the cash prices of single-dose vials of its blockbuster weight loss drug Zepbound on its direct-to-consumer platform, Lilly Direct. Eli stock is down over 0.5%. Barrick Mining stock is up nearly 3% following reports that the company is exploring spinning off its North American gold assets into a listed business, separating the operations from gold and copper mines in riskier parts of the world. And Wynn Resorts is climbing 3% after Goldman Sachs included Wynn on its conviction buy list, saying the company has a best-in-class Las Vegas business, while improvement in China's Macau region can drive transformative upside. I'm Tucker Silva, and that is Wall Street Watch.
Mike, before we go further, this will kind of tie into the Fed Beige book at some point. I just saw a Chiron, go across the screen, and it was talking about Black Friday, and it said consumers focused on value and deals. Mike, aside from 2021, where we were 3 stimulus checks deep,
when don't we focus
has there
on
ever been
value and
do you
deals?
ever remember going into a year end and businesses being like,
consumers,
well, we think people have a boatload of money, so we're gonna just not discount much? No, do you ever is this the most useless stuff to talk about?
Yeah, it is not helpful.
When do we ever see the headline, consumers willing to spend whatever it takes to get a Lexus under the tree? And boy, do they need a big tree.
I played hockey last night, as I do most Sunday nights, and I was talking to
How'd you do?
a pair poorly.
Oh.
Again, the Thanksgiving work-off was not going well.
Yeah.
But I was in good company there. There was a pair of brothers who went to a hockey sale. The largest played-again sports in the country is in Dedham, Massachusetts. And
Didn't know that.
And they had a sale starting at 7 a.m. where if you were in the door between 7 and 8 a.m., you'd get half off any one item. They showed up there at 5:30 and said that there were over 1,000 people out there.
1,000?
At again, a very small, again, being the biggest played again sports in the country does not make it a big store.
No, that's like being the largest minnow.
Yeah, it is a small store, and they said that there were people pouring in. And I just have to put my hand up and say that I am personally shocked that there were no fistfights at a store that predominantly sells hockey equipment.
Right, you would think they'd have like a little corner where that's expected.
Yeah. So,
you reach for the item at the same time. Okay.
I mean, I get it. Like, a nice pair of hockey skates is going for like $1,500 these days. So,
are you serious?
Oh yeah.
Jesus.
Yeah, like a top of the line hockey skate.
I would have figured like $500.
No.
$1,500.
Yeah. I bought mine used for $700. Yeah.
This is insane. Like
goalie equipment.
You must really like hockey.
Yeah.
Goalie equipment. You need to take out a mortgage.
Correct. Yeah. So I don't know what that had to do with anything, but yeah, I do think people were excited. That's what it had to do with. I do think people were excited about deals. Hence the massive lines outside of a new and used hockey equipment retailer.
So I've got a new thing that we got to talk about then. Good. So Fed's Beige book shows K-shaped split deepens amongst consumers. That's the headline from Bloomberg.
Okay, how did the Fed's Beige book do that based on stories that they get from people?
Just, they hear about this and everything. Sure. I am wondering if we have hit peak K-shaped. And the reason I bring this up is because everyone is talking about this right now. It is the most visible discussion in markets and the economy right now is this idea of the K-shaped economy where the high-income earners are doing just fine and everybody else is struggling. And again, this thing, you can always, extrapolate this further and it could always go further than where it is today. But I'm just wondering if, look, once everyone knows about this and is paying attention to it, have we kind of gone to, is it something that's going to be roped in from here now?
My problem is I don't know how you measure it. I don't have a good way to measure it. And also, it kind of changed over time. The concept started during COVID, and specifically it was more used to describe workers in some types of industries, such as tech and financial services, that largely kept their jobs during COVID and worked remotely, versus those in hospitality, retail, and food services who had to go in if they were able to keep the job and otherwise lost their job. And it's now morphed into people who are doing all right financially and people who are doing poorly financially, and that divergence. And I just don't have a good measuring stick to figure out how we would have hit peak badness.
I don't know. It just feels like at least it's every other story that we cover.
Yeah, I would agree that we might have reached peak coverage of the K-shaped economy. I have no idea how to measure whether or not the divergence between high-income and high-wealth consumers versus low-income and low-wealth consumers has reached its peak. But I suspect that, like you do, given the fact that we are covering it every single day on the program, somebody's writing about the K-shaped economy every single day, that we've hit that point. I also think that because it's become so popular, it's probably going to be... The term itself is going to be taken and applied to other situations down the road. Like we describe every bad part of the economy with the term recession, we're going to use K-shape to describe all sorts of things.
It's kind of like whenever there's a scandal, we just slap gate at the end of it.
Yes.
And,
precisely.
Yes. So this is going to be like, what's it going to be like?
There's, 3 terrible teams in the MLB, and they're describing the K-shaped baseball season.
Yeah, got it.
Yeah.
Toyota comes out and has 3 colors of a car. Oh, that one's, the bottom of the K.
Yeah.
You want to be top of the K.
You do want to be top of the K if you are a consumer brand.
I like that. Let's take a quick break, and when we come back, President Trump says that he has made his choice to lead the Federal Reserve. He hasn't told us who it is yet, but we'll discuss after this.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
At the Armstrong Advisory Group, we know that retirement might not be the end of a career, but rather the start of a new chapter you and your spouse get to build together. Hi, this is Mike Armstrong, and the way you plan as a team can make all the difference. That's why we're offering a brand new free guide called Retirement Planning for Spouses. It covers real issues couples face, how much income you'll need, where you want to live, how you'll spend your time, and how to make sure the surviving spouse is protected long term. Retirement planning isn't one size fits all, and this guide may help you start building a plan that fits both partners, both goals, and both futures. Call the Armstrong Advisory Group right now at 800-393-4001 to get your free copy of our new guide called Retirement Planning for Spouses. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Nobody wants to think about estate taxes or nursing home costs. But if you want to protect your money, your home, and everything you've built, you've got to get ahead of it. That's where Cushing & Dolan come in. They're experts in estate planning and elder law, and they've just released a brand new free guide called Balancing Asset Protection and Avoiding Estate Taxes. This guide lays out practical ways to keep your assets safe, and yes, even reduce or completely eliminate your estate taxes. If you already have a plan but aren't sure what your risk looks like, or you've been meaning to start one, this guide gives you exactly what you need to take control. So don't wait. Call Cushing & Dolan today at 866-848-5699 and get your free copy of their new guide called Balancing Asset Protection and Avoiding Estate Taxes. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederiksted comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
President Trump says that he has made his choice to lead the Federal Reserve, but hasn't told us yet who that person is. Widely expected to be Kevin Hassett, who runs the Council of Economic Advisors, and that's what we know.
Yeah, well, let's talk about what else we know about this. Whoever his pick is, is undoubtedly going to be on a path to lower interest rates. Now, I will buy that once you are in the role, your viewpoints might change. But to be very clear, the only people the president is willing to consider for the role are those who have very publicly come out saying that they believe interest rates should be substantially lower than where they are right now.
Yes.
So I do believe that whoever he puts into this role, Hassett or otherwise, is going to be leading a charge to lower interest rates. But as we talked about earlier, we talked about the Fed frequently as this unanimous body. It is not. It is a group of 12 people who vote on policy decisions surrounding interest rates, and they don't seem to all agree. Furthermore, what the president seems to be focusing on mostly is, hey, how do I bring down things like mortgage rates, which will give things a boost? And as we've seen recently, the Fed really has no control over that, and those are going to be much more susceptible to other factors in the economy that is outside the control of at least the Federal Reserve.
The Fed has cut the Fed funds rate 1.5% since the middle of last September. The average 30-year fixed-rate mortgage has gone from 6.15% to 6.22% during that time.
Right.
Like that's the whole ballgame. Now, the Fed could, in theory, start to try to exert more control over the long end of the yield curve.
Yeah.
But remember, there is no free lunch anywhere, but especially in financial markets. And so if you say, hey, the Fed's going to undertake what they call yield curve control, which is not only are they going to target a rate for the short end, but for the long end, you then have to wonder, okay, what does that do to everything that depends on that? If the Fed says, yeah, we want to get, mortgage rates down to 5%, okay, buckle up because I bet the price of lumber is going to be going up, and I bet the price of steel and aluminum are going to be going up, and I bet the price of everything's going up, and that means that inflation's higher, and that's not good for anyone either. So there's no free lunch on all this stuff. There's no button that the Fed pushes that just says like low inflation, high growth.
Right.
Like that's the button that we want. It's the easy button from Staples. But I've had one of those, and it doesn't connect to anything and doesn't actually work.
A very funny but sort of dangerous prank that a family member of mine pulled is they replaced a first aid kit with just an easy button from Staples.
What does that mean?
You opened up the first aid kit, and there was no first aid materials in there. It was just an easy button from Staples.
That seems like something that you could get charged a crime for.
Yeah, I thought it was hilarious.
This wasn't like a public one, right? This was
it
like
was just inside our home.
Okay.
Yeah.
Yeah, that seems
Good
still
prank.
dangerous.
Yeah. You didn't like that one?
No, I'm just...
Yeah, we
took
took
a different
Like,
scenario.
imagine just a
we-
child running up there with a sliced hand, and you go for the Band-Aids, and it's just empty other than a stupid "that was easy" button.
Hey, we're trying to get the AED. Oh,
Yeah.
look, it's
Yeah.
just an easy
That's
button.
literally
Like,
what I thought of. Okay.
it's not good.
Very good. If you're retired or getting close, now's the perfect time to take a fresh look at your estate plan. Doing your planning early can help you protect your assets and keep more of your wealth in your family. Cushing & Dolan, the leaders in elder law and taxation, have put together a new guide called Balancing Asset Protection and Avoiding Estate Taxes. And in it, you'll learn how to secure your assets if you ever need long-term care, how to avoid having everything tied up in probate, and how to get a clearer picture of your estate tax exposure. The guide also breaks down real options that may help you reduce or even eliminate your estate taxes when you plan the right way and plan early. Whether you have an existing estate plan or starting from scratch, this guide makes it easy to understand what steps could help you and your family in the long run. To get your free copy of this guide, call Cushing & Dolan right now at 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Just trying to think of other variations on the
Easy button
replacement for the first aid kit.
Yeah.
You could do again. None of these are good ideas,
but funny.
Don't recommend them.
I'm just picturing like someone like going to like use a fire extinguisher, and it's just like there's just a fart machine,
Yeah,
or something like that.
Yeah.
Or like you get in a car accident and it's just like, instead of an airbag, it's a whoopee cushion.
Yeah.
Like,
yeah.
It's,
Yeah. Yeah.
That might
those sorts
actually
of
work,
pranks.
actually.
Those sorts of pranks, just right up my alley.
I feel like you could do a good SNL skit on this somehow, but I don't know like exactly how you
real
play it
world
out.
appeal, not a great idea, but cartoonish like pranks are right up my alley.
Boston landlords, quote, willing to do anything as rental market cools.
There's not a group that gets a lot less pity than Boston area landlords. Made a killing over the last several decades in terms of home price appreciation, and your average asking rent is now $3,043, which is actually down a few bucks compared to the recent highs.
So I guess I'm just trying to like think through this. So if you look at, the Boston market for real estate, traditionally it's been a really strong one. It doesn't have the peaks and valleys of what we see in a place like Miami, as an example. It tends to be a slower growth, but very consistent growth, because Boston has historically had a disproportionate share of its income generated from people in the healthcare and education fields, which tend to be more impervious to recession than other. It's
also one of the more difficult areas of the country to build.
Right,
it's a historical city with very severe restrictions on height of new buildings and all sorts of things like that. Historical preservation is pretty big in that city, and so unlike, say, Miami, it's more difficult to get approval for new buildings. So all of those things have led to a pretty
and let's be honest, the NIMBY is strong.
Yeah, the NIMBY is strong
Bostonians.
in the Boston area. I think what you're seeing right now is a reversal of a few of those trends, right? The exact same things that kept Boston area real estate flying, again, comparatively high during the Great Financial Crisis, which were, again, universities still spending money, and areas like biotech and healthcare research still getting a lot of funding from the government, were what kept things afloat. And those are the exact opposite effects that you are seeing right now, right? There's been government cuts to education spending and research spending, and that's on the margin a lot of what the Boston market relies upon. And so I don't find this immensely surprising.
No.
If you take it in combination with some concerns about what could be rent control across the entire state of Massachusetts, which, again, we don't know yet, but could be on the ballot for next year, I can see why landlords are more concerned than usual in the greater Boston area.
So here's the piece that I come back to then. If they're really that concerned, why are they not selling their units?
Yeah.
Because we're not seeing an uptick in listings for sale for, you're not seeing that.
Yeah, I mean, my answer would be this isn't a logical and correct decision to make, but every time I talk to anybody who owns rental property in the greater Boston area, they're always like, oh, God, I can't afford to pay. I don't want to pay the taxes on that sale. Which is a bad reason to hold real estate, but you think about the
But you can
massive,
afford to pay the taxes.
You can absolutely afford to pay the taxes.
You would have the money from the sale.
You just don't want to.
Yes.
And I think, especially when you talk about small landlords, that is a very significant effect. And especially when you factor in now things like the millionaire's tax, which, again, if you're selling a 3-story unit in the South End that you've owned for 2 generations, you might be popping into that millionaire's tax threshold. I think there's just an unwillingness to sell in some real estate markets.
Let's take a quick break here. When we come back, we got a whole bunch more coming up in hour 2. So make sure you stick around.
Sometimes we know it's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Mark Vonner is the CEO of Veterans Development Corporation. Mark faithfully served his country from 1981 to 1984, and we're thrilled to have him as a partner and presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family that includes his father Victor and brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and it's one of the main reasons he chooses to give back to this special community. Mark is honored to continue the legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the Disabled American Veterans Department of Massachusetts. You can join Mark and help our great American heroes today by making a donation to support the DAV Department of Massachusetts. Please visit dav5k.boston. That's dav5k.boston.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
We're proud to announce that Circle K is now the official convenience store of the DAV Department of Massachusetts. At Circle K, supporting those who bravely served our country isn't just a commitment, it's a heartfelt mission. Circle K is honored to stand with the DAV Department of Massachusetts to ensure that veterans receive the care and recognition they deserve. If you'd like to do your part, please visit davma.org. Thank you for standing with Circle K and the DAV Department of Massachusetts, and thank you, veterans, for all you've done.
When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederickstead comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. If you're retired or getting close, now's the perfect time to take a fresh look at your estate plan. Doing your planning early can help you protect your assets and keep more of your wealth in your family. Cushing & Dolan, the leaders in elder law and taxation, have put together a new guide called Balancing Asset Protection and Avoiding Estate Taxes. And in it, you'll learn how to secure your assets if you ever need long-term care, how to avoid having everything tied up in probate, and how to get a clearer picture of your estate tax exposure. The guide also breaks down real options that may help you reduce or even eliminate your estate taxes when you plan the right way and plan early. Whether you have an existing estate plan or starting from scratch, this guide makes it easy to understand what steps could help you and your family in the long run. To get your free copy, call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Retirement Planning for Spouses. Mike, one of the things that I think is really important to focus on are some of the tax planning items that spouses need to consider basically every single year, especially if there are any kind of age differences between two spouses.
Yeah, real life example here. I was working with somebody recently who spouse just retired and they were trying to figure out where their income is going to come from this year, and the idea of taking some money out of the IRA came up. And so it was a decision, whose do we take it out of, whose is bigger? And the decision ultimately was, we're going to go with the older spouse here because they are going to commence their required minimum distributions earlier.
And so when you're trying to formulate those decisions, whether it's an RMD that you need to consider or potentially, Roth conversions, it's something where the decisions you make one year can have lasting impacts 10, 20 years down the road, depending on the family.
They most certainly can. Again, when you have a married couple, there's increased options in terms of what to do, but that means increased complexity. Things like the widower's tax when you lose a spouse, especially if there's a big age difference down the road. These are things that you can and should plan for because they can make an immense difference in the success of your retirement strategy.
Folks, the guide is titled Retirement Planning for Spouses, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by visiting ArmstrongAdvisory.com. That phone number again is 800-393-4001, or request it at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck Mike Tucker with you here, and we've got markets with a very modest sell-off to start the month of December. Still trying to get all that tryptophan out of their system, but the S&P 500 down 23 points, about 1/3%. Dow Jones Industrial Average down 200 points, about 0.42%. And the NASDAQ Composite down 97 points, about 0.4%. So again, very modest decline to start the month of December here. 10-year U.S. Treasury up 7.1 basis points to 4.09%. That's going to be putting some pressure on mortgage rates, probably getting them back towards that 6.3% range by the end of the day. We've got the U.S. dollar index down 0.25% to 99.15. Gold is up $7.90 an ounce to $42.62 and 80 cents. And we've got crude oil up $1 at $59.55 on West Texas Intermediate. Despite that, I think tomorrow's going to be the day, Michael.
It is?
Tomorrow's going to be the day.
Which one?
AAA national average for gas prices at $3.01 right now. I think tomorrow we might get below that $3 mark on the AAA national average. Remains to be seen if we, stay there, if, oil prices move back up here. But at least for tomorrow, I think we're going to get there. So that's kind of exciting to me.
Yeah.
I enjoy that. I like seeing that. I'm sure the folks that are listening to us down in Texas are like, hey, this isn't the best for us. And I understand that. But as someone who is not employed in the petroleum industry, I'll take it.
All on board.
Let's see. And for some reason, I don't know why, Bitcoin down 7.5% today. Did it miss earnings?
Can we talk about that for a moment? Because we've talked about the correlation between stocks and Bitcoin, and it's
been elevated recently.
Definitely increased, over the last few years compared to in the 2010s. So that is actually something you can measure. The day-to-day price movements on Bitcoin more correlated to stock prices today than it was, say, in 2015, which makes sense given the growth of the asset class, the fact that you can invest in it, generally speaking, in a brokerage account today versus in years past. I'm just wondering, correct me if I'm wrong, but it seems to me it would be very difficult to see stocks rise to any significance on a day when Bitcoin is selling off by 7%.
It seems tough these days. The other thing that is kind of wild is, remember, and again, I don't have a dog in this fight. I just am observing. Bitcoin's supposed to be this idea of, digital gold. Gold's been freaking ripping the second half of the year. Bitcoin, not so much. And that's interesting to me, just in terms of what it might be saying about why people might actually own it and how they may trade it differently from gold, silver, and other precious metals. I just think it's interesting to look at, and that's all I have to say about that. I want to talk about this piece from the Wall Street Journal. American consumers lose patience with high car prices. I got to tell you, here's the thing. So I leased a car back in 2023.
Okay.
A nice, lovely Subaru Outback.
Yes.
Boring, dependable, puts me at least 20 years older than I am when driving down the street, you know? And again, I don't know that I got a deal or didn't. It was fine. They just, Subaru, just as an example, unveiled a new Outback this year, and they just put out pricing for the 2026 models. And the prices all jumped by anywhere from 5 to 15% relative to last year's. And I got to tell you, I have some sticker shock when I start seeing Subaru Outbacks that are priced north of, $45,000.
Sure.
Because that is not a premium vehicle. And to me, again, we're all anchored to, certain numbers in our minds based on, what we saw at a certain age and this and that. But when I start seeing Subaru Outbacks getting priced close to $50,000, I look at it and I'm kind of yikes, that's kind of nuts.
If we buy the premise that American consumers are in fact losing patience with high car prices,
which I don't also.
Yeah, I'm not sure I do. But if we did, which brands do you think are in the worst positioning for a shift in consumer car spending? Ford comes to mind just because they've completely abandoned the sedan market.
I don't think so.
No.
The F-150 buyer is the F-150 buyer.
Yeah.
Right,
then that floats the entire market.
If you're buying that, you're buying that. There is no alternative for the F-150 buyer. I think, okay, so if you look at...
I'm not worried about luxury brands because that's a different segment, and that's not what we're talking about here. So Audi, Mercedes, Cadillac, all of those to me
you're not
are,
looking
are
at those.
Going to be fine. I'm worried about the Nissans, Volkswagens, Toyotas, Hondas, GM, Chevy. Which one of those are worse positioned for a change in consumer behavior? Because one area that
towards cheaper vehicles.
I mean, one area that seems to be benefiting, Kia is just cleaning up. I feel like, they are like every fourth car that I see.
I think them and Honda are very well positioned.
Yeah.
I guess I'm going to kind of back into this somehow, pun intended. I think Kia and Honda are both very well positioned. Like every time, I always like to just look around at cars every month just because I never like to actually buy them. But every time I look at, hey, the pricing on like a CRV or something like that, I'm like, wow, like this is, a pretty good deal given what else is out there. I do think that Nissan is kind of screwed, but I think they were kind of screwed before this anyways. Like that's just kind of the nature of Nissan right now. I think Toyota's well positioned in that they're building the vehicles that people want. And based on everything I hear and see from like Toyota dealers, even though their pricing is a little bit higher than what you get on Honda, they're so in demand that they have like they have this huge backlog basically.
That's certainly what I experienced. I probably called 30 dealerships, none of which had the vehicle in stock that I was looking for. But it is a premium price point that people are seemingly willing to pay based on the reputation for reliability plus the hybrid engines.
I'm trying to like go through just who else is out there. I'm just sorting through. Okay, so we've gone through Ford. Buick, I don't really know what they even make anymore.
Yeah.
I got to be honest, I just don't.
That brand stands for nothing.
Cadillac's a premium one. Chevy, I haven't looked at like pricing for what Chevy has out there these days on like, Blazer, Trailblazer, stuff like that. So I don't know.
So let's go back. Why don't I agree with you. I don't buy that American consumers are losing patience with high car prices. I think they like to bemoan it, but
the sales numbers are fine.
Sales numbers are fine, and all they're doing is extending out their credit even longer, which is a terrible idea, but is being done without much of a blink.
So here's what I will say about I've talked a lot about how Americans buy cars badly. Like they make bad buying decisions. And I saw an example of this over the weekend on social media where someone had bought like a $110,000 pickup and financed it for 7 years at 10% financing. So they ended up, it was going to cost them $150,000 to buy this $110,000 pickup. And here's what I do have to say. If you always want a new car and want to get the best bang for your buck, you should not be buying that car with a 7-year loan. If you can't figure out how to make the numbers work on a 3 or 4 year car loan, you should be leasing in a lot of cases. You will end up with cheaper payments. You will end up being able to get the new vehicle you want every few years without having to worry about, am I underwater on this or am I not? Because, quite honestly, if you're buying a vehicle with a 7-year loan, just so that you can say, like, at the end of that 7 years, oh, I paid it off, that's not really good business based on the depreciation of the vehicle and the interest rates that you need to pay right now.
If you drive it for another 7 years afterwards, sure, I can get on board with that. But you need to.
But you basically need to. And there aren't, like, the person who's buying the $110,000 pickup truck is probably not buying it for 14 years.
Yeah, likely not.
So, again, I think we have to just do a better job of figuring out, like there's this fascination with car ownership over leasing. And again, I'm not like lease. The car I have right now is the only car I've ever leased. But I did it specifically because I said, look, I want this car for a few years to see how it works for me. I don't want to be locked in long term on it. And I don't want to be paying longer term, higher interest rates, because remember, when you take out a longer term car loan, the interest rate oftentimes is higher as well. And so I think people need to be amenable to, hey, like, do I actually want to own this car for a long time? Because if I'm just one of those people who might trade it every 3 to 4 years, you're probably better off being in a leasing cycle than trying to buy a car with a 7-year loan and then having to roll the extra loan over into your next vehicle. Let's take a quick break. When we come back, we'll do a little bit of trivia, and then we'll talk about private credit hysteria after this.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
We're proud to announce that Circle K is now the official convenience store of the DAV Department of Massachusetts. At Circle K, supporting those who bravely served our country isn't just a commitment, it's a heartfelt mission. Circle K is honored to stand with the DAV Department of Massachusetts to ensure that veterans receive the care and recognition they deserve. If you'd like to do your part, please visit davma.org. Thank you for standing with Circle K and the DAV Department of Massachusetts, and thank you, veterans, for all you've done.
Make protecting your assets easier by getting Cushing & Dolan's new guide called Balancing Asset Protection and Avoiding Estate Taxes. You'll learn how to keep your assets out of the nursing home and get strategies that may help reduce or even eliminate your estate taxes. Get your copy right now by calling 866-848-5699. That's 866-848-5699. Or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederiksted comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Mark Vonner is the CEO of Veterans Development Corporation. His dedication to serving our veterans has made an incredible impact on his family and employees. And he is so proud to be the presenting sponsor of the DAV 5K Boston.
My name is Ashley Vonner, Director of Operations at Veterans Development Corporation. I wanted to learn the family business under the guidance of my father, Mark Vonner. VDC is more than a general contractor. It's a service-disabled, veteran-owned small business that goes above and beyond for the veteran community. With Mark's military background, serving in the Marine Corps, our company is committed to supporting the Disabled American Veterans Department of Massachusetts. VDC has been the presenting sponsor for the DAV 5K for many years, striving to spread awareness of this great organization. Working for Veterans Development Corporation has shaped me into the person I am today, and I am proud to be a part of this organization.
Please visit dav5k.boston to show your support today.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. There's still time to book your holiday vacation to St. Croix, St. Thomas, or St. John. Enjoying one or all three, and if you act fast, you could be on St. Croix to experience their Crucian Christmas Festival. taking place this December through early January. Discover the magic of this long-standing tradition with incredible food and entertainment, or just go soak up the sun, stroll along white sand beaches, and feel the rhythm of the heartbeat of the islands. The USVI is America's Caribbean paradise. Plan your winter escape now at visitusvi.com. That's visitusvi.com. Time for trivia here on the Financial Exchange. And on this day in 1998, Exxon announced a $73.7 billion deal to buy Mobil, creating ExxonMobil, the world's largest company at the time. ExxonMobil is currently the 8th largest company by revenue. So our trivia question today, according to the Fortune 500, what is the largest company by revenue? Once again, according to Fortune 500, what is the largest company by revenue? Be the 5th person today to text us at 617-362-1385 with the correct answer, in addition to the keyword trivia, and you'll win a Financial Exchange Show t-shirt. Once again, the 5th correct response to text us at 617-362-1385 with the correct answer and the keyword trivia will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Piece from Bloomberg Opinion by Paul Davies, who was a reporter from the Wall Street Journal and Financial Times. Quote, private credit hysteria will get very real next year. We've been talking about private credit for the last few months. We were talking about it even a couple months before that.
Our perspective was probably a little bit different than Paul's. It was more that there seems to be some smoke right now, and we need some time to determine if there's fire. But what I would say about private credit right now is it seems to me that it needs to be darn near perfect for the next 6 months in order to dispel the rumors of its fiasco. You've had a few bankruptcies and frauds that have been very public. And the reason I think it needs to be perfect is because there seems to be a big cooling off period by most of the big investors. And so I'm just wondering, who's going to allocate new capital to private credit right now? Like, unless the rates move up substantially, I don't see why you as an insurance company or an endowment or a pension fund or as a registered investment advisor who have been, getting pushed more of this stuff would be willing to allocate large degrees of new capital to this asset class that is opaque and showing warning signs.
So part of it might be, hey, you've been doing it and you just feel like you need to continue because you have a return that you need to try to hit. The part that's challenging about this is because these are, private instruments, it's tough to get data on what we're seeing in terms of flows into them. Right. We don't even know how much money is held within that private credit sphere, let alone, hey, how much is, flowing in on a monthly or weekly basis. So what I can tell you, if that mechanism slows, mechanism of
private credit issuance,
if you do not have as much funding going into private credit, that in and of itself, depending on the scale of that slowdown, has the potential to be something that causes a credit issue in the next 12 to 24 months. Let's wind the clock back. Tucker, can you get the time machine fired up for us? We just got to get some plutonium for the reactor here. And we're going to go back to... Oh, yeah. It's 2006 right now.
Wow.
And Steve Jobs hasn't announced the iPhone yet. And we're all hanging out at, a nice summer barbecue, just, chilling. But under the surface, you're starting to see some problems bubbling up in subprime credit. It's not a real issue yet. Like, there haven't been any major defaults or anything yet. But about a year from now, in 2007, there will be some problems that, really come to the surface and people start to wonder about. And the problem that happened in the housing market then was, hey, you had defaults that started to pile up in the subprime sector, which then meant that investors weren't sure what the subprime debt they were holding was worth. In turn, they said, we're not going to allocate as much money towards this kind of lending. which then made it harder for people to buy homes, which caused valuations to fall more, which during a time when a lot of people are trying to sell because of adjustable rate mortgages adjusting up, meant that they couldn't sell, had to take big haircuts, led to bigger credit losses, and we know the story. But that funding drying up was a key part of the cycle, and that, hey, the housing bubble doesn't burst if lending continued at the same rate, because you could have kept the plates spinning and everything would have been not okay, but okay-ish. In this case, it's not necessarily the bursting of a housing bubble that you see, but that mid-market business that depends on a $700 million loan from private credit fund XYZ by company ABC. If that funding cannot continue, it becomes problematic because a lot of this is used for inventory and things along those lines. And so if you can't buy inventory, then you can't eventually sell that inventory. You start laying people off, and the whole thing comes apart. That's the concern that you have, and why, even though there haven't been a ton of defaults to this point, if investors get nervous enough about them that they stop flows into this area, that could trigger problems that show up in the next year or two in the economy.
And guess what? This whole economy right now is being built upon the idea that there's going to be a tremendous amount of development of AI infrastructure, none of which can happen without debt.
No.
None of which can happen without massive amounts of debt issuance and investors willing to scoop that up. So it's kind of, in a roundabout way, the whole ballgame right now.
Taking a look at markets as we head towards the bottom of the hour. The Dow now off about 0.5%, 233 points. S&P down about 0.33%, 25 points. And the NASDAQ off about 110 points, a little less than 0.5%. So still in the red for our major indices. Quick break. Trivia Answer and Wall Street Watcher next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
The Armstrong Advisory Group understands retirement planning, and when it comes to married couples, it can be about more than money. Hi, this is Mike Armstrong, and our new guide called Retirement Planning for Spouses tackles many issues that couples face as they're preparing for later life. This guide keeps things simple, focusing on important matters such as making sure both partners understand where their money's coming from in retirement, being aware of scams, how to stay organized if one spouse outlives the other, and ways to handle gifts, donations, or legacy goals as a team. It's a straightforward look at the steps every every couple can take to feel confident about retirement. Call the Armstrong Advisory Group right now at 800-393-4001 to get your free copy of Retirement Planning for Spouses. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about estate tax reduction and asset protection strategies that can help reduce or eliminate your estate taxes. Todd, there are some high net worth clients that would like to reduce the size of their estate, but they don't want to give up access to their assets. Is there anything they can do?
There certainly is, folks. So this is a combination of things. One, you obviously want to do your basic estate planning first. Get your foundation in place, the basic revocable trust planning to help utilize whatever exemptions you don't use up through gifting. Now, when we talk about reducing the estate, we are talking about gifting. But as you said, they don't want to lose control. So there are these special trusts that are designed called spousal lifetime access trusts, where in essence, you use an LLC to keep control of the investments, manage the investments, and make distributions. And then the non-voting shares get put into these irrevocable trusts where you have each other's spouse has access to the assets. So there's a way of getting the assets into those irrevocable trusts, which are now growing outside of your estate tax free, while at the same time working together to keep control and use what's in those trusts.
The law firm of Cushing & Dolan have been helping families like yours for more than 40 years. Request your copy of Todd's brand new guide called Balancing Asset Protection and Avoiding Estate Taxes by calling 866-848-5699. That's 866-848-5699, or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Traders are back from the Thanksgiving holiday and turning the calendar to December, where markets are currently seeing a modest sell-off. Right now, the Dow is down by about 0.5% or 221 points. S&P 500 is down about 0.33%. NASDAQ down by 0.4%. Russell 2000 is down just over 0.8%. 10-year Treasury yield up 7 basis points at 4.092%, and crude oil up over 1% higher, trading right above $59 a barrel. Some NVIDIA-related news to begin with, where NVIDIA invested $2 billion in Synopsys common stock as part of a broad strategic partnership. Shares in the provider of software for chip designers are climbing 3% higher, while NVIDIA stock is rising about 1%. Meanwhile, several crypto-based stocks, including Coinbase, are seeing losses after Bitcoin tumbled further to $84,000 now. Coinbase shares are down over 5% on the day. Elsewhere, Eli Lilly announced it is lowering the cash prices of its single-dose vials of its blockbuster weight loss drug Zepbound on its direct-to-consumer platform. Eli stock is down about 1%. Barrick Mining stock is up nearly 3% following reports that the company is exploring spinning off its North American gold assets into a listed business. And Wynn Resorts is climbing 3% after Goldman Sachs included Wynn on its conviction buy list, saying the company has a best-in-class Las Vegas business, while improvement in China's Macau region can drive transformative upside. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question. According to Fortune 500, what is the largest company by revenue? That would be Walmart. Robert in Saugus, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. And we play trivia every day here in the Financial Exchange. See complete contest rules at financialexchangeshow.com.
People are ordering smaller pizzas and fewer toppings. What does that tell us?
Probably nothing.
I would
Quite
say
honestly.
probably nothing. I will say Pizza prices have gone up. Like, it's been noticeable now. But the price of everything has gone up, and it's been noticeable now.
Yeah. Again, it probably does indicate the same thing that we are seeing indications of elsewhere, which is around half of Americans are struggling financially and are finding ways to cut back, and we're seeing it here with pizza spending. But again, does it indicate anything about where the larger economy is going to go or consumer spending is going to go? I really have some doubts about that, and I think that largely you probably discount any of it. I will say, speaking of food deals, I went to Chili's for the first time in quite a long time.
Did you get some baby back ribs?
We had a group of 14 people, so we were all brainstorming, like, where can we go with 14 people, including... Sorry, it was more than that. It was 20 people, including 10 kids.
On, like, short notice?
On short notice, no reservation. Like,
yeah.
Okay, let's check out Chili's, and wow, was it reasonable.
Yeah.
The biggest complaint, they did away with the Awesome Blossom in, 2006. And everyone a bunch of people I talked to were like, yeah, I'm pumped about having the Awesome Blossom. And they asked the waitress for it, and she had no idea what we were talking about. But
because that was their Bloomin' Onion.
Yes.
Yeah.
So I was pretty impressed by my stop at
I wonder why
Chili's
they did away with it,
people.
because, like, the way I look at it, I mean, onions are, pardon the pun, dirt cheap.
Yeah.
And it would seem to be something with pretty high margins, and that, look, if you're selling the thing for, I don't know, $10, $11 as an app, that onion probably costs you somewhere in the ballpark of, if you're buying in bulk the way Chili's does, like 10 cents to buy. Throw it in a little batter and call it a day. I mean, it's kind of like the Caesar salad of apps.
Yeah. Folks, I want to talk to you about the brand new guide for the month of December from the Armstrong Advisory Group. Again, this is just out today. It's our December guide, all about retirement planning for spouses. Now, this is a new one from us, and it covers a number of different things. But yeah, most of us head into retirement as a married couple, and depending on your situation, it can really vary how you do your planning. One thing that's really important to keep in mind, if you are a married couple, 65 years old, non-smokers, there is about a 50-50 chance that you're going to make it to age 90. That is a lot of planning to be done. That is nearly as much of a retirement as was your working career in many cases. And so all sorts of planning considerations to be done here. They get even more complicated if there's an age gap of 5 years or more between the two of you. All sorts of things like, where am I going to get my health insurance from? What is it going to cost me? Especially if there are not the enhanced subsidies on Obamacare. I've seen this all the time where one spouse reaches 65, they go on Medicare, they retire, and the other one's still working. And, there's some irritation there. One spouse is able to retire, the other is not because of medical reasons. But what do you do with Social Security and pension planning? When should you be filing for Social Security, depending on that age gap and who has the larger benefit? If I have a pension, how do I select my survivor benefit? Am I better off taking the lump sum rather than the pension itself? How will my Medicare premiums be determined? How much income am I allowed to have? We cover all of this and a heck of a lot more in our new guide. Again, it's the free guide from the Armstrong Advisory Group called Retirement Planning for Spouses. You can get it by calling 800-393-4001. It's really useful reading if you guys are within a decade of that retirement date. You can check it out at armstrongadvisory.com. Request your copy there. It's free. Or you can call us at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Piece here from is it the Financial Times? Yeah, it's the Financial Times. A full-blown crisis. Americans brace for a surge in healthcare cost. So basically, we've got 22 million Americans that are enrolled in insurance under the Affordable Care Act that are going to see the subsidies for those plans gone next year, basically unless there's some action very, very quickly.
That 22 million number, that was the number that will be impacted by this, or is that the total number of people on Affordable
That was
Care
the
Act.
number that said that this was related to tax credits for the plans.
I think I was actually surprised by it. The data that I saw showed 45 million total Americans on the Affordable Care Act. That probably includes families, so children. And then, nearly
about half of them
those
receive subsidies.
Are seeing subsidies that may be disappearing. They give the example of a 64-year-old PR consultant who's currently paying $400 a month. Their plan would jump to nearly $2,000 a month should he renew that existing plan and see those credits disappear. Hence why this is going to be a hotly debated item how many days does Congress actually do work this month? Like 6?
I don't know, but basically,
can't be many.
Basically, there's the deadline to select a plan is December 15th. Which quite honestly means that you can't fix this by then.
Right. You're not going to know how much you are going... Well, you're going to have a worst-case scenario of what you would pay for your health insurance by December 15th, and you might get some help if Congress passes something on this. But there are... the original subsidies were designed to allow anyone with income of 400% of the poverty level to get the subsidies. That was dramatically expanded during COVID, and that has since lapsed. So that is the question, is do they do something additional here? And again, that number, right, 45, that's more than 10% of Americans on Affordable Care Act health insurance of some sort. Add that on, there's another 67 million Americans on Medicare. I don't know how many are on Medicaid and what the overlap is there, but that is I guess it's a larger portion than I realized of Americans who are not getting their health insurance from their employer. Right, like between those three, Medicare, Medicaid, and Affordable Care Act, that's approaching, a third to a half of all Americans who do not get their health insurance from their employers. And this is, I guess my point would be, it's a bigger issue for more Americans than I realized. I don't have a good fix for this.
There's no fix for any of this.
Yeah, it's just the only question is, are we as taxpayers willing to subsidize the cost of this insurance more?
There's no fix for any of this.
Healthcare in America is very expensive. Unless you want to significantly worsen the quality of care, there's just no good fix.
No, and look, you can't fix this for 2026 right now. Like, I'll be honest, there is no way to fix this.
Which, like the cost of overall care, or
no, there's no way to fix these subsidies now. People have already made their purchasing decisions on these.
Yeah.
Like, let's say that you're looking at this plan and you say, okay, it's $1,965 a month. I can't afford that.
Yeah.
If Congress passes something this week, you can maybe figure it out before that 12/15 deadline.
Right.
Mike, is Congress going to pass anything this week?
No.
I'm going to go with a hard no.
Yeah. No.
They're not. And so someone's not going to make a decision being like, well, maybe I'll be reimbursed for this later. You don't make that decision with like a $1,500 a month gap that you're trying to fill. You might make that if there's like a $20 a month gap that you're trying to fill, but the purchasing decisions are already made. And so what you're going to end up with on this is, hey, you're either going to have a bunch of people who go without insurance next year and everything that entails, or you're going to have a bunch of people who spend the extra money on the insurance and then do not have that money to spend on a monthly basis elsewhere in the economy. Neither of those is really great. Now, I'm not saying like, hey, you should blanket, extend this and do this and that. All I'm saying is this is where you are heading, and it's because we haven't done anything to fix this while we've known it's been coming for an extended period of time.
Right.
So ultimately, we need to get to a point where we actually take a look and decide what we can do to try to fix the U.S. healthcare system, because I think we can all agree that like what we're doing right now really sucks. Like, it's...
Does anyone have an optimal model, though? Like, you look around the world, and I don't know that there is a perfect model for healthcare delivery.
No, so it's not about having a perfect model for... Like, you're never going to have something that's perfect. But, I mean, again, like, let's even just look at, like, the basic way that you sign up for healthcare, which you mentioned, Mike. There is no reason why health insurance should be tied to your employment. The only reason it is, by the way, for anyone listening who wants to know, is because in World War II, the federal government said, hey, we're going to cap wages at a certain level in order to, try to manage inflation that was raging at the time. And in response, companies said, okay, you're capping our wages. Great, we're going to start offering health insurance as a perk because we can't pay you more, but we can cover your health insurance. And basically, U.S. health insurance has been attached to your job ever since. There's no reason why your ability to be insured should be tied to your employment. Like, sure, it could be a perk that your employer offers if it's better than, whatever else is out there. But there's no reason why this should be what we, do as default. It's just what it's been since World War II because of, kind of what became normalized then. But just because something's normalized economically doesn't mean, yes, let's continue doing this. And so when people don't have any incentive to shop around on their insurance, obviously insurers then don't really have a ton of incentive to shop around on things like networks and drug coverage and this and that. And so you don't have real competition that happens because people don't view it as their responsibility to shop around for insurance and the best pricing. Companies try to, but they try to do it in terms of, hey, how do I minimize the cost while providing this benefit? Not what's best for my employees necessarily as far as the best benefit package.
Last item of note on this healthcare thing, and then I know we need to take a break. The Affordable Care Act is very likely going to be left with a bunch of very sick people. It already kind of was, but
which is going to make the pricing even worse.
If you're healthy and your premium surge 400%, you're just going to go without insurance. And if you're sick, you're going to pay whatever you need to for the health insurance, which is going to then, like you said, make the cost of insurance worse next year.
Which is why the way insurance works is that in any risk pool, the people that are not actively experiencing the problem cover the costs of those who do. I pay my homeowner's insurance each year. It's several $1,000s, not because I, get a plaque or something like that I put on my wall, but because I know that if something ever happens to my house where I need that coverage, everyone else who's not experiencing what I'm experiencing is able to, those premiums pitch in to cover that cost. It's just how it works. Quick break here. When we come back, it's Stack Roulette.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served nearly 20 years, and we are so proud to have him and his business as a key partner and a presenting sponsor of the DAV 5K Boston. The DAV Department of Massachusetts does incredible work, and it's one of the first organizations that Mark became familiar with after his military service ended back in 1984. As Mark built his company, he knew he'd be giving back to fellow veterans who needed jobs, support services, medical supplies, and so much more. Mark works with disabled veterans every day, and it's one of the key reasons why he's such a big supporter of Dan Stack, the DAV Department of Massachusetts, and the DAV 5K Boston. You can join Mark Vonner and his team and make a donation to the DAV Department of Massachusetts or become a sponsor of the DAV 5K Boston. Simply visit dav5k.boston. That's dav5k.boston.
Nobody wants to think about estate taxes or nursing home costs. But if you want to protect your money, your home, and everything you've built, you've got to get ahead of it. That's where Cushing & Dolan come in. They're experts in estate planning and elder law, and they've just released a brand new free guide called Balancing Asset Protection and Avoiding Estate Taxes. This guide lays out practical ways to keep your assets safe, and yes, even reduce or completely eliminate your estate taxes. If you already have a plan but aren't sure what your risk looks like, or you've been meaning to start one, this guide gives you exactly what you need to take control. So don't wait. Call Cushing & Dolan today at 866-848-5699 and get your free copy of their new guide called Balancing Asset Protection and Avoiding Estate Taxes. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The Armstrong Advisory Group understands retirement planning, and when it comes to married couples, it can be about more than money. Hi, this is Mike Armstrong, and our new guide called Retirement Planning for Spouses tackles many issues that couples face as they're preparing for later life. This guide keeps things simple, focusing on important matters such as making sure both partners understand where their money's coming from in retirement, being aware of scams, how to stay organized if one spouse outlives the other, and ways to handle gifts, donations, or legacy goals as a team. It's a straightforward look at the steps every couple can take to feel confident about retirement. Call the Armstrong Advisory Group right now at 800-393-4001 to get your free copy of Retirement Planning for Spouses. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled regardless of your medical conditions as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
The Financial Exchange is incredibly proud to be a partner of the Disabled American Veterans Department of Massachusetts. If you didn't have a chance to participate in this year's race but would still like to support our great American heroes, please visit dav5k.boston. Your gifts help fund free rides to medical appointments for veterans in the nation's first DAV-led housing initiative, providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today. That's dav5k.boston.
Mike, what do you got for me for Stack Roulette?
Opinion piece from Bloomberg. We need to Uberize the power grid for AI.
What does that mean?
I don't think it's going to get you the job done, but I think it has to do with two things. One would be surge pricing. Two would be better technology in homes to control peak demand. And they point out one example here where the Mid-Continent Independent Operator System, running the second largest U.S. grid, they report that the total demand has only increased by 1.8% over the last 11 years, but that peak demand did rise by 6%. So that's what matters for the grid, is they have to deal with the peak demand, not the overall demand. They need to, because of the way the power generation works, they have to focus on that peak demand number. And so if you can employ better technology in homes, offices, and data centers, hypothetically, to spread out peak demand, rely more on other technologies, then their argument is you don't need to invest quite as much in the power grid. I'm not sure.
My answer is that you should build more.
Yeah, I think
build more generation, build more transmission, and then we don't have to deal with rationing electricity.
Yeah, because that's effectively what you're talking about here.
Yes.
Is rationing electricity. And, I've, by the way, tested out the idea of that smart thermostat that when peak demand is hitting, heats up my home automatically an extra 5 degrees. And my answer is that solution kind of sucks, and you'd have to pay me a heck of a lot more for me to be willing to do it again.
Don't like it. Just let's make it easier to build more capacity, and I think we can get there. Taking a look at markets right now, trying to rally off the lows of the day. Dow off 208 points, S&P down 16, NASDAQ down 49. So we got a little bit of a rally happening on the tech side to try to drive things back into the green. We'll just have to see if we get there. We're done for the day. Back at it tomorrow as we continue through the first week of December.